What if the most infamous startup name of recent memory is back on the public markets, and its debut tells a surprisingly complex story? A familiar brand just re-entered the investment arena, but its first-day performance offers a fascinating, almost contradictory, glimpse into market sentiment. You probably remember the dramatic headlines surrounding WeWork's global ambitions and its initial public offering attempts. Well, WeWork India, a distinct entity operating under an exclusive license, has now stepped into the spotlight with its own public offering, which kicked off on October 3rd and runs through October 7th. And its day one performance certainly gives us a lot to unpack. On its debut day, the overall subscription for WeWork India's IPO stood at a rather modest 4%. That's right, just 4% of the total shares found buyers. It wasn't exactly the enthusiastic rush you might expect for a major public market entry. Diving deeper into those numbers, we saw everyday retail investors, folks like you and me, showing a bit more engagement, subscribing to about 14% of their allotted portion. But the larger institutional players, what we call qualified institutional buyers or QDBs, and the non-institutional investors, essentially the big money funds and high net worth individuals, they're taking a very cautious wait-and-see approach. Their bids barely nudged past 2%. However, here's where the narrative takes a truly fascinating turn, almost like a plot twist in a market drama. The employee portion of this IPO? It's nearly fully booked at a remarkable 90%. Think about that for a moment. The people who know this company best, who are immersed in its operations every single day, they're showing an overwhelming vote of confidence, snapping up almost all the shares earmarked for them. It's a powerful statement of internal belief, and it stands in stark contrast to the broader market's initial reluctance. So what exactly is on offer here? WeWork India has set its IPO price band between 615 and 648 rupees per share, aiming for a valuation of approximately 8,685 crore rupees at the highest price point. Now, a crucial detail to understand. This offering is entirely an offer for sale, or OFS. What does that mean for you as an observer or a potential investor? It means WeWork India itself isn't raising fresh capital for its operations. Instead, existing shareholders, primarily its promoter group entity Embassy Buildcon LLP and an affiliate of WeWork Global, are selling off portions of their stakes. All the funds generated, an estimated 3,000 crore rupees, will go directly to these selling shareholders, not into WeWork India's coffers. It's like a large-scale asset sale by its current owners, rather than a fundraising round for future growth. This IPO, as it progresses, presents us with a compelling dichotomy, a decidedly lukewarm external interest versus a very strong, almost resounding, vote of confidence from within the company. As the offering continues, the big question looms large. Will that powerful internal faith ultimately sway the broader market? Or will the cautious approach of the big institutional money continue to hold sway? We'll be watching closely as the story unfolds. What are your thoughts on this interesting market dynamic? Let us know on social media, and make sure you're subscribed so you don't miss our next update.